How are food stamps benefits calculated? If you've ever been frustrated because you don't get enough to get by, this is something you really need to understand. Knowing how they do the math can help you get more food stamps, which is what we'll be discussing in our next video, and you won't want to miss that. I'm Nicole from Low Income Relief, where we help millions of people save money and get free stuff. The entire food stamp system is built around the idea that a household should contribute about 30% of their net income on food, even when they're receiving food stamps. So the USDA sets a maximum benefit for each household size, and then they subtract your expected 30% contribution to determine your total benefit amount. That part is easy. It's how they calculate your net income and determine your contribution that is really interesting and complicated. A lot of mistakes are made, and that can cause you to receive less food stamps than you should. First, let's start with your income. The government counts all income from all sources, including earned income and unearned income. Earned income comes from a job. Unearned income comes from cash benefits, Social Security, unemployment benefits, child support, and other forms of assistance. In order to receive food stamps, your total income must meet income limits, which is usually around 130% of the federal poverty level, but may be higher in some areas. For example, Washington State's income limit for basic food is actually 200% of the federal poverty level. We're just going to assume that you meet all of the eligibility guidelines for this video, just to keep things simple. The second step is to determine your maximum possible benefit. This maximum is based on your household size. For 2022, the maximum benefit is $250 for one person, $459 for two people, and $835 for four people, as you can see on this chart. During the pandemic, states have been issuing emergency allotments that raise most households' benefits to at least these maximums. However, many states have already stopped issuing those extra benefits, and it is expected that all states will stop sometime this year. For ongoing updates about your state, subscribe to our channel and watch our weekly videos. For this video, we're going to ignore the emergency allotments. Once your max benefit is established, the office will calculate your net income. Your net income is what is available to purchase food after necessary expenses are met. Remember, they expect you to pay 30% of your net income toward your household's food costs. To calculate your net income, the office will use a series of deductions. Some of these deductions are very basic and others are kind of complicated. We'll start with the basic ones. The standard deduction is supposed to offset basic unavoidable costs of living. The standard deduction varies depending on how many people are in your household. In 2022, the standard deduction is $177 for households with 1 to 3 members, as shown in the chart on screen. The earnings deduction reduces your earned income by 20% to account for payroll taxes, work-related expenses, and to act as an incentive to earn money. This deduction only applies to income that you earn from work. The child support deduction offsets any legally obligated child support payments that you make. If you are paying child support, you need to make sure that the food stamps office knows so that they can reduce your countable income accordingly. If you receive child support payments, though, those payments will count as income. These are the easy deductions. I'll be explaining the next 3 deductions, which are far more complicated, in an upcoming video about how to get more food stamps. The dependent care deduction offsets any out-of-pocket costs that you pay for childcare or adult care while you are working, looking for work, or participating in education or work training programs. The medical expense deduction compensates for out-of-pocket medical expenses greater than $35 per month, but you can only claim this deduction if someone in your household is over age 60 or disabled. Only about 12% of people who qualify claim this deduction, and we're going to explain how to do that in our next video, so make sure that you're subscribed to our channel because you won't want to miss that. The excess shelter deduction is very complicated. This deduction is supposed to compensate for housing costs that exceed 50% of your net income. Housing costs include rent, mortgage payments, property tax payments, utilities, and a basic telephone bill. I'll be explaining this in greater detail in an upcoming video as well. After all of these deductions are taken out, the office now knows your net income, and they expect you to contribute 30% of that towards your food costs. So they'll subtract 30% of your net income from the maximum benefit for your household size. I know this is confusing and way too much math, so let's see how this applies to Sarah. Sarah is a single working mother who is raising her 2 children. She earns minimum wage and pays $992 per month for her tiny apartment. The first step is to calculate Sarah's income. At the minimum wage of $7.25, she earns about $1,256 per month. Now we have to process the deductions. We start by deducting the standard deduction from Sarah's income. That's $177 because there are 3 people in her household. Her remaining income is $1,079. Next, we deduct the earnings deduction, which is 20% of Sarah's earned income. Her earned income is $1,256 per month, so we subtract 20% of that. That's $251, so her remaining income is $828. Sarah doesn't pay child support, so we don't need to worry about the child support deduction. Sarah does pay childcare costs, though, and that's $78 per month, so we will have to deduct that for the dependent care deduction. Her remaining income is $750, which is what we'll call the countable income in the next step. Now we have to calculate the excess shelter deduction, which is more complicated. First, we need to figure out what half of her countable income is. Since we're at $750 now, half of that would be $375. Now, we take her total housing costs of $992 and subtract the $375, which is half of her countable income. That's $617 remaining. However, the shelter deduction is capped at $597, and Sarah doesn't qualify for an exemption, so as a result, her shelter deduction is maxed out at $597. So we subtract that deduction from her remaining countable income, which leaves us with $750 minus $597 is $153. Her net income, according to the food stamps office, is just $153. The food stamps office will expect her to contribute 30% of her net income toward her family's food costs. That's $45.90, so they will deduct that from the maximum food stamps benefit for her household size. That's a little unfair if you ask me, since Sarah clearly can't even cover her own rent and basic expenses, but that's how government math works. I know this video was a little boring and had way too much math in it, so I appreciate that you took the time to stick with me. If you've watched this video, you'll be able to better understand our next video, which is about how to get more food stamps, and I know that's the information that you really want. So be sure to subscribe to our channel so you don't miss it.